Dan Ives of Wedbush writing, tech stocks have way oversold in June. They ultimately represent major buying opportunities as these bearish narratives have overshadowed the future massive growth prospects. Dan joins us now. And of course, when we're talking about tech, we're talking about hyperscalers in particular, which have been the huge losers until yesterday, where you actually saw a little bit of a turnaround. Why do you reject the notion that people are pushing back against the spending plans of some of these tech behemoths?
Look, the hyperscalers are $700 billion. I mean, that's what's funding the AI revolution. I mean, when you talk about memory chips to NVIDIA to everything else, but that's just the first phase, because what the hyperscalers are doing is, this is the build out. It's Vegas Strip building in 1955. But ultimately, the monetization now is going to come. I mean, when you look at Meta, they're not just spending to spend. You look at Microsoft, they essentially own the enterprise. Alphabet, 5% of their customers have gone to the AI path. Same thing with Amazon. So my whole point is, you've had this tech rally, but Mag 7 right now, penalty box, essentially. I think it significantly outperformed second half of the year. And I think earnings season, as we see in July, I think that's going to be a huge validation moment for big tech.
So the Vegas Strip maybe is a decent analogy on the just actuality of it, not in the scale. I mean, we're talking JP Morgan expecting $5.5 trillion to spend on CapEx spend for AI heading out to 2030. We're talking about massive numbers that are accelerating, not decelerating. And capacity constrained companies, right? I mean, some of these companies have said, we can't give you all the compute you're looking for. So how do you see them monetizing without raising prices enough to really trickle into the cost of what everybody is spending on an everyday basis?
Yeah, well, first off, for every dollar spent on, let's say, an NVIDIA chip, there's an $8 to $10 multiplier across the rest of tech. So that's extremely important in terms of what you see in terms of, you talk about some of the single stock moves, just the broadening out what we're seeing in terms of tech. And you could argue for names like Caterpillar and others. But when it comes to hyperscalers, look, it's an arms race. That's why the question is, like, can they actually cut CapEx? They can't. In other words, like, you're diving into the deep end of the pool. Because if they cut back, then they go behind others in line that will clearly go ahead of them. Anthropic, OpenAI, ultimately, as they go public, they'll just have more and more cash. And I think that's the reality right now. And to those, the bears will be like, oh, it's spending to nowhere. It's the opposite. I mean, you're essentially building out a new economy for consumers, enterprises, and for the first time in 30 years, the U.S. is ahead of China when it comes to tech.